Are you ready to take your organization to the next level and become a game changer in your industry? Then look no further. Welcome to Yokai Business Show, where we bring you the world's top business thought leaders to share their secrets to success, from leadership development to finance, marketing, self-development, human resource management, and much, much more. Our guests reveal the strategies, tactics, and mindsets that have made them so successful. So let's dive in and learn from the best in the business. Well, ladies and gentlemen, thank you so much for joining us on the show. Today, we're talking about property and real estate. Now, I know a lot of people have been asking me, what is out there? And today, we have a gentleman who truly has been helping a lot of people and has created wealth for himself. And as you know, we like people that have results. And Patrick Grimes has results, and that's why we have him on the show. Patrick, thank you so much for joining us. You have an incredible saying that made me chuckle when you said it earlier on. Would you share with our audience today what that saying is when it comes to this topic?
Well, our goal right now is to invest for the upside of this downturn.
Incredible. Do you know how to do that? Well, if you have questions around that, stick around and discover how to do exactly that. Now, a little bit about Patrick. Patrick Grimes is the founder and the CEO of InvestOnMainstream.com, which is a private equity firm that enhances business professionals' quality of life by providing tax-shielded and inflation-hedged passive investments in alternative investments. People like you and I who wants to do it smart. Remember, we are into doing things smarter. Since 2007, Patrick has purchased distressed real estate assets, renovating and stabilizing them for a long-term cash flow. Isn't it what we all want? Patrick has raised over 50 million to acquire in the excess of 600 million plus portfolio, including about 5,000 units in multi-family apartments community in emerging markets across the United States. What I love about Patrick, among many things, he's also an author like I am. Many of you knows about that great book we have put out, which is 8 Qualities for Great Leadership, that you can find anywhere in the bookstores, including our Amazon. Patrick has written, co-authored an Amazon bestseller book, which you also can find at the bottom of this recording. And he holds a BS and a Master's in Engineering, as well as an MBA. This man knows his stuff. And what I also appreciate about Patrick is he does what he has learned. He does what he talks about in conferences. And today you are in for a treat, because you're going to discover exactly what works. You're going to discover in person what is written on Forbes and on many outlets that are out there today. Patrick, again, thank you so much for being here with us today.
Glad to be here. You're definitely a man talking about things I'm interested in, so this should be a good time.
It's going to be great. You know, one of the things that sort of stood out for me is, despite, all this achievement and a crazy busy life, you are taking time to be generous and give people something that they're actually going to use in their lives. And you've just recently become a dad. What an exciting time.
Yeah, wow. Very exciting. Yeah, it's been rewarding, and I'm glad that I'm at where I am in my life now, because my wife and I have some freedom we're remote, and I have some control that I can spend more time with the family, and we can travel a little bit with the little one. So it's good for us.
Tell me, just before we dive deep to talk about the subject we were talking about today on wealth creation, you are able to live the lifestyle that you have right now, work from home, sort of control the world from a distance and be with your baby and with your wife. Is that all because of the success you've had? Tell me what has made this possible.
Well, I started out, like many of your listeners, just a hardworking, busy professional. I graduated mechanical engineering undergrad and worked hard to climb that corporate ladder, ended up with a master's in engineering and business. But I think, like many of your listeners, that it's it's a slog and it's difficult. And so it was the work until you die type path. And what made it possible is I got some advice really early on from actually who's still a good friend of mine, and he invests in my deals today. But he was the founder of the first machine design firm I worked for. We did automation, mostly medical device, robotic
Right.
stuff.
Right.
He told me invest as much as you can as soon as you can into real estate. And so I'm like, why? Wait, you're very successful in the high tech space. He goes, well, his regret was not investing more sooner into real estate. So, that's what got me on that path. And after reading Robert Kiyosaki's Rich Dad Poor Dad book, I was, and with that constant coaching, I was energized down the path.
Yeah, yeah. Well, I'm glad that you got on there because, through the decisions you made back then, you are helping a lot of people. And I can honestly say that the sooner you invest, the better your life will be. The returns are enormous. But then if you are Bill out there and you haven't started, it's not all lost. The best time to start was yesterday, and the next good start time is today. So apply the principles you're going to learn today. Uh, Patrick, you've got an interesting story because way back in 2007, during the crash, you sort of lost a lot of things and then you've come back up. Talk to us about that very briefly.
Well, thankfully, I was young back then. I took everything I had, which wasn't a huge amount, and I put it into some real estate investments back in 2007. Back then, that's when everybody was talking about how the market was never going to go down because we were right there climbing that bubble.
Right.
And at that time, I invested in, I didn't know really what investing was, and I was getting my feet wet. So I thought, well, let's go for really high returns. And I did research. I invested with some, developers that had a perfect track record and had double-digit returns every year. Unfortunately, I personally guaranteed a pre-development, went after it like I was just going to get rich quick and lost it all. So, and not only that, but I mean, it was pretty rough because they drag you over the coals pretty good, me over the coals pretty good, and came after me because it was all fully recourse. And so there's a lot of risks associated if you're not very careful. And having that experience very young humbled me, learned me how to invest and not speculate, and make sure that I'm in recession resilient, and I'm the tortoise and not the hare.
Yeah, it did. And the beautiful thing about that is it teaches you to be successful because there's no success without failure. You've got to go through some of these things to become strong and to be wise and be able to deal with a situation later on. Now, I want to jump into talking about the concept, which I don't think we have it here in UK, but you have it. It's 1031 exchange. But before we talk about that, I just remembered something. There is a concept that we usually have that if you want to be wealthy, leave everything that you're doing, go into real estate. And you have a different take on that.
If we're talking about wealth building, I've been a big fan of diversification. I think most investors are in their employment qualified retirement plans, and you have variants of that, I think, in England, and they identify as a doctor, attorney, entrepreneur, whatever it is. They don't identify as the investment manager of their life or the chief investment officer of their family's future. And because of that, they do a hands-off approach to wealth building. I'm going to give it all to an employer's retirement account. I'm going to give it all to a kind of financial planner, advisor, right?
Right.
Unfortunately, that leads them down scary path, like it did me, and that means that they're mostly indexed in stock markets and things that rise and fall. And that means when they turn on the news and they hear looming reports of recessions and inflation, they fear for their livelihood. They fear for their ability to retire, to have enough money to retire. And so I think having lost it all one time, and having been in the ups and downs of the high tech space, I think diversification, and my passive investor guide on my website has always, from the very beginning, has said, don't put everything in real estate. It said, but don't put everything in the stock market. It shows the diversification of the middle class the high income earners and the ultra wealthy, whereas the middle class have about 8% of their wealth in what are called alternative investments. That would be things like real estate and private equity. Then the high income earners at 25, the ultra wealthy have 50% of their wealth. And so if you really want to start investing like the high income earners, ultra wealthy, you don't put everything in a real estate deal. You diversify. You don't put more than 5 or 10% of your wealth in any particular investment, but you aim for 25 to 50% of your assets in these alternative investment projects, non-conventional approaches outside of what the norm is, but it requires you to put on your investment manager hat to take the investments of your family future seriously, because you have to shift away from I'm an engineer, like I had to shift away, to I'm also an investor and I need to learn, take some time to learn how to invest for my future.
Right. That's right. That's right. What I love about investing is once you grasp the basics and you keep learning, you are investing greatly in your future. It's unlike, anything else out there. If you do it well, the returns are quite good as well.
Yeah, and you can gamify it. That's the new buzzword, right? You can have fun with it. Like any hobby. It can be something your wife's telling you to do, which is a honeydew working on the house. And it can be hard. Well, I know a little bit about those myself. Or I can have fun with it. I can be like, hey, this is really cool. I'm improving my house, or I'm improving my future. I'm creating something that's going to outlive me and a legacy. Or I'm just securing my family's future. How energizing is that? And I can position the love that I have for my newborn and apply that to pursuing my investment career. And you're gonna need that because, like me, many of your listeners are working real hard. Like, when do I ever have time to do this? Well, this is potentially much more important than the moneymaker job that you have. It doesn't take a lot of time, but you need to take some time to make sure that you're setting yourself and your family up for success.
Incredible. Well, I love that indeed. Let's dive deep to talk about the 1031 exchange. Very briefly, what is it? And maybe you could share one quick story that could show our listeners, what is it all about?
Well, and I don't know if there's a version of this in the United Kingdom, but I imagine there is. In America, the government relies on the private sector to house Americans, feed Americans, and energize Americans. So they subsidize investments to do that, to house, feed, and energize in housing, food, and energy. So they do that by giving you tax advantages. And for that reason, our cash flow from rents is typically offset by tax advantages, which we call depreciation.
Right.
And also, when we go to sell a property, they want to incentivize us to reinvest that back into real estate. They don't want us to go, okay, I'm going to go buy Bitcoin now because the government needs us to buy properties, fix them up, to build properties, to house the growing population. And so they have a mechanism that allows you to buy a property and sell it for a profit. And if you undergo some specific steps, you can keep all the profit. And you can take that entire amount, put it into the next property and defer your taxes. And that's what the 1031 exchange does. And we bought a property 2 years ago for 27 million, and under a year we sold it for 37 million. And that would have been a massive tax bill.
Yeah, absolutely.
We asked our investors, do you want to trade forward with us for a 1031 exchange, or do you want out? A couple wanted out. The vast number of them wanted in, and we traded them forward. And so they kept all of their profits, and they invested 100,000. Then they had 170,000 that we put forward in the next investment. And now they're cash flowing on a much greater number, and we bought a bigger property, and it's all tax deferred. So they're actually investing the government's money, deferred taxes, and they're making cash flow off the government's money on that deferred taxes. And so then we can continue to do that. The 1031 exchange is oftentimes referred to as the most powerful wealth building tool still available to ordinary Americans. I'm sure you guys have something similar in England.
I'm sure of it because what happens in America tends to happen here in England as well.
Right.
But how do you address concerns about lack of control and sometimes potentially lower returns in passive investment for individuals seeking a balanced life?
Well, yeah. So when to point at the trade-off, right, and the challenge that I had when I was slaving away in my high-tech career and moonlighting, buying real estate properties and trying to do those in better locations than I lived. I live in California. I was trying to do it
Yeah,
in Texas. I was always competing with these guys who had these long-term, decades-long relationships, and they were buying better deals. And they had on-site people that they managed that had flipped 100 homes or renovated thousands of multifamily apartments. They could do it more efficiently, more predictably. And those deals were much more profitable than the ones that I was able to do. Unfortunately, I was spending all my time away from my family, friends, and hobbies to get the success that I had. I had success. But what is success? Is success working 24/7? Or is it family and pursuing the causes that you care about and stuff, having that time? And so the trade-off in what I had to do was learn how to partner, trust, but
right,
verify, build a team. And by spending time and learning about the investments and researching different operators, the deals that we find are ones you wouldn't have ever even known existed because they're pretty much all off market. Broker pocket listings or direct to owner, and
yeah,
they're much profitable. And not only do you not have to spend the time to find them, or we have dozens of people a year just doing that. You don't have to
right,
spend the time to close on it, to renovate all the units, to improve the value. You don't have to spend the time to go find another property, and you don't have to spend the time to organize a tax deferred exchange into the next one. It
right,
turns out that, and I've got articles in Forbes. If you read Patrick Grimes' Forbes single family versus multifamily, and Patrick Grimes' Forbes asset protection, and I addressed that as I did, and I tried to do it all myself, and I lost it all. I was very risky. Tried to do it all myself, and I lost all my time. But by partnering, right, I was able to
right,
achieve great returns where I get paid first. Is we call it a preferred return, where you get paid before the sponsor, but they're so good at it, they're willing to defer their return until you get yours first.
wow,
And that's what we do for our investors. And there's risk, but I believe it's lower risk if you invest with the right person because we're doing it in better markets than you live, and we have better deals than you have, and better teams, more experienced teams, and we can do it at scale, and we can
yeah,
keep trading it forward. Whereas you may find a property like I did, but then once you found that one property, you don't want to find another one and then find another one and find another one. You want to just hold it and hold it forever. Well, my return went down every year because I held it forever when I could just keep trading it forward. So it's a tough challenge, but the key to our freedom was when we learned how to partner right. Learn how to partner
indeed.
right. And that's really the question, is how you find the right partners.
Yes. Well, we will go into that. And I can honestly say, in business in general, especially Bill listening here knows this to be true because we talk about all the time, is if you want to do something worthwhile and want to go further, partner with others. In fact, we did that on our book that we mentioned earlier on. I partnered with 7 other co-authors and created an international bestseller. In life, find a way to partner with great individuals that you trust and you've verified, and then of course become one great team together. If you can find those individuals, it's you reduce your risk because we all have got different strengths on that. Let's talk about how do you verify the good organization to partner with or individuals to partner with.
Yeah, that's a challenge. And I'll tell you what, when I stopped doing single family, and actually it was my wife that was with me at Starbucks when we had the notary show up and I closed on the refinance for my last single family investment. I said, I'm not doing this anymore. And she goes, why? I was like, because I'm going to marry you. And I'm like, no, I'm not going to make that happen. I continue to bust my ass 24/7 on these investments. And so take a break. And so, yeah, we got married, and it took 2.5 years from the after we got married in California and Beijing. She's from China, which was a wild story in itself. And like 2.5 years of me learning how to partner. And that was
Right.
the real skill. Learning how to find the right people. We traveled all over the United States, went to all kinds of real estate conferences. I listened to thousands of podcasts, read countless books, and I'm a learner. I love to learn. My one of my parents has 3 PhDs. My sister is a PhD professor, and so I'm constantly learning. And to passively invest, you don't have to do what I did, but I went all in, and like I was getting a third master's degree or something.
Yeah.
But I traveled a lot. I looked at a lot of markets, met a lot of brokers, met a lot of operators, people that are succeeding. I listened to podcasts. I researched the people that were on the podcast. I went to conferences to learn who was investing with those people. I set up calls with those people, and I started understanding who are the real players, who are the talkers, the coaches, the people trying to monetize interest in investing, and then who are the real people that are out there. And I'm an engineer, so I value getting hard work done, right? Who are the
And the
people with
process.
their head? Yeah, who are the people with their head to the grinding wheel, just getting the work done? And those are the people that I invested with. And I started getting in their hair a little bit. I don't have any left, but back then I had a little bit of hair. And I started, well, what can I do to help? Can I travel with you and help get my elbows dirty and do due diligence on some of these assets? And I'd underwrite and sort of learn how to build the forecasting model. And I started learning a lot about how they do things. And I started finding ones that wanted to build a portfolio that would ride out a recession. That resonated with me. I wanted to find one that had been through the 2008 recession, and maybe they lost like I did, but we came back kicking smarter. That was, I found people that had similar values. And ultimately, after quite some time, I started partnering.
Incredible.
And
In that journey, what perhaps 2 or 3 things that you are really looking for so that those who are listening, they can think of, oh yeah, I would like somebody with these qualities. What are those top qualities that you have found in the people that you are partnering with now?
right. And so there are people that I don't believe the gurus, the people with the coaching programs were the ones that I was focused on. I wanted
Right.
people's day job to just be operating real estate. They're a little harder to find. I wanted their experience to supersede economic downturns. So I was looking for people that had gone through 2009 and 10, had some pain, and could articulate precisely where things went wrong and how things are structured differently now. That spoke to me.
Right.
And I looked to see if they walk the walk and talk the talk. And a lot of the times I'd hear people say fancy things, but when I'd ask them questions like, well, how is this investment protected or underwritten or forecasted in a way to survive downturns or natural disasters? I ask questions like that, and they give me good articulated answers. For example, what is the replacement cost insurance? They offer that, and they say, well, we got this or that, and what kind of reserves do you have on the sideline, right? We usually keep 6 to 8 months in reserves just in case. And that protects my investment. And that we do all these things now. In fact, the discounted buys we find are people that didn't do these things. How do you protect yourself from rising interest rates? Well, you want to know people that can appreciate, that understand the question. And that's the thing, is people that haven't been through downturns just don't even understand the question of why I would ask.
Right.
If they value the question, they commend you for asking the question, and then they give like, oh, great question. Here's how we do it. Then they get it, right? And they really understand. So, and then I talk to people that have invested with them because I'm a communicator. So I like to know what the communication is like. So that's probably
Awesome.
4 items. I could keep going, but it's
Yes.
really not all that difficult. At the end of the day, you do need to make a leap at one point, but you do need to undergo some interview processes with individuals to make sure they're the right guys.
Incredible. Do your due diligence and save yourself from pain. Let's dive deep and talk about the passive investment, the advantages of passive investment over active investment for individuals who are trying to get their personal time back.
Well, this could be a whole podcast in a bit. And so if you want to read the more, seminal work, you can go to my Forbes author page, and addressed a lot of these topics at length, but like me, you probably have a lot of interests. Like you want to go do things with your life. You
That's
want
right.
to, you want to not wait until your golden years to check off your bucket list, right?
Yeah.
So, if you're really going to be an attorney or a doctor or lawyer, they say it takes like 8,000 hours to gain mastery in something. Well, do you want to gain 8,000 hours to become a master in a completely different profession? And that's the challenge that is kind of what you got to decide if you want to become active. And like many people in college, like in the University of California system, for example, the average major change is 3 times. People think they want to go do something. It's not until you get in there and start doing it that you realize it's a lot of work. And there's a lot of podcasters out there talking about get rich quick and, become financially free, leave your day job. Well, I'll tell you what, there's a 90%, most of the gurus I've talked to, there's a 90% dropout rate in those coaching programs because real estate, running a sophisticated real estate company is a completely different profession and it's a lot of work. And it takes a very unique kind of entrepreneurship analyst kind of individual to really sustain that and build that out, systems and processes. That is a whole different thing than whatever it is you're doing. And if you're interested in investing, you're probably doing really well at being an attorney, an entrepreneur, a businessman, a doctor, whatever it is. And are you willing to sacrifice that for being active? And even so, when you're active, you're your own operator, you're your own responsible, you're your own manager of your own assets. That means you're responsible and accountable if things go wrong. So you're kind of
That's
diving
right.
in inexperienced without the right team. And like me, I didn't know what I didn't know. I didn't know that
Mm.
signing on a loan in my own name and buying a property in my own name meant if the market took a downturn, they could come after me and all my other assets. I didn't know what cross collateralization was. And so I didn't know that buying an investment property with a piece of money that I had coming in meant they could take everything I had. And that is unfortunately the case if you're a
Yeah.
sponsor. Unlimited liability. Like you buy your own home, a lot of the smart people say put it in a trust because turns out if you get sued because somebody trips and falls, you're unlimited liability in your own home, right? And
That's right.
so that's a challenge so there's a lot of risks associated with it. And being a passive investor, as long as you do your due diligence, you make sure you're not getting with the wrong guys. You're finding people long-term experience, they have track record, they have good communication, and they're the tortoise and not the hare. You don't get distracted by flashy returns, but you look at long-term sustained growth of your portfolio. What you'll see is that those assets will in fact accelerate quite a bit faster and with fraction of the time than most of the people that are the do-it-yourselfers. And that includes me. I mean, I could only do with my full-time portfolio, I could only do 4, maybe 5 buy, renovate, and refinance and rent properties in a year.
Yeah.
Whereas as a larger sophisticated operator, we can do thousands of apartment units, right? Because we can raise tens of
Right.
millions of dollars and have systems and teams to make that happen. So your wealth can scale and diversify much faster by partnering.
Incredible. Love that you're simplifying the whole process here for everybody. We are coming toward the end of our time here, Patrick, but I've got 2 more questions here that I would love to hear your thoughts about. And the first one is, what are common pitfalls or mistakes in passive investing, and how can listeners avoid them?
So what I like to tell people is uh, don't just trust the loud speakers. I'd say, as I said before, go through the due diligence steps and make sure that the person's been around, he's been around for a while, and make sure that their investments are structured like what they talk about, and talk to their investors and make sure the communication is there.
Thank you. And the last one, how can individuals strike the balance between active managing investment and enjoying the life they desired through the passive style?
Yeah, well, most investors are not managing pretty much anything except for day trading and a stock portfolio. And unfortunately, the majority of those are losing over the long haul. And so I tend to be the promoter of of diversification, which means that if you're not just going to be in real estate, but maybe you're going to be in a diversified energy fund or other kinds of assets which we offer, you can't actively manage and be the expert in all these things. So what I think you can be active about is you can be active about finding the right partners that are the right active investors to invest with in various alternative investments that are non-correlated to each other. It means they don't rise and fall together. And if you spend that time to become an active investment manager or investment officer of yourself and your family's future, I think that's where you'll see the real return.
Incredible. I love that. There you have it, ladies and gentlemen. If you really want to know how you can maybe get started with this way of thinking, I want to invite you to click the link below and get to Patrick's website. In fact, Patrick, where can they connect with you? I know you've got several places that are available for them.
Yeah, so we have two websites. One is investonmainstreet.com, invest on, and then main, and then street.com, all spelled out. And then we have passiveinvestingmastery.com, passive investing mastery. And so we have investments that they could opt in for and get on our list to see what we have coming up. We have a recessionary acquisitions fund. And as we talked, that's a very unique way to take advantage of the upside of this downturn. We have a lot of really amazing investments within that fund that we're tackling right now, and we're excited about that. It's probably the coolest thing since 2009 and 10. I've been wanting to take advantage of a downturn. I'm finally there. So if you see your investments right now on a downward trend because we're seeing the tide go out with investments, well, there are ways that you can ride the wave right now and hop on board there. I'd be happy to have you with us on that journey.
It's awesome. So again, those sites will be at the bottom of this recording, which you can access. And there's a great book which Patrick is giving away. We'll give you the link for that as well. I've been on the website earlier on. You just have to put your details and you can get access to an Amazon bestseller book that talks about some of the concepts we've talked about here today. Patrick, it has been a great pleasure of mine having you on the show, and can't wait to have you back to hear how you are doing and how many of your clients are doing as well very soon.
Absolutely. I appreciate you having me.
Incredible. Ladies and gentlemen, thanks again for tuning in. And again, if you've got any questions, you know where we are. Don't do this journey alone. You know what we talk about here, that, it's not meant to be done individually by yourself. You can learn and you can apply the things with others. And we have, as an example, Patrick here, you can reach out to our team. And I'd never want to finish off without talking about our book, 8 Qualities for Great Leadership, that we've put out there recently. And we want you to go get that book, because I think we have something very special in there. As you may already know, some of these great authors have been on our podcast, and you'll be able to connect with them. We've got great stuff going on there. Until next time, ladies and gentlemen, live well, live with passion. Know that the best is truly, truly yet to come. And goodbye for now. Thank you for tuning in to Yokai Business Show. We hope you have enjoyed today's episode and have gained valuable insights and inspiration from our amazing guest. Don't forget to subscribe and leave us a review to help us spread the word. Also, be sure to check out our Leadership Ultimate Success Mastermind program, which is designed to help you and leaders in our community to do great things and support each other along their leadership journey. Until next time, live well, live with passion, know that the best is truly yet to come.